Even CEOs of multi-million-dollar companies make irrational investment decisions driven by fear, potentially eroding their wealth. What if your deepest fears about the market aren't based on reality, but on cognitive biases that are costing you a fortune? One recovering gambler lost everything because of the fear of missing out, and you might be making the same costly mistakes. Learn how investment psychology can protect your wealth by conquering your investment fears. Fear can really mess with your investment decisions. Think about it. When the market drops, you might feel a strong urge to sell everything. This panic selling often happens because of fear of losing more money. But selling low is usually a bad idea. It turns a temporary dip into a real loss. This emotional reaction is a common way fear costs you money. Our brains sometimes play tricks on us, leading to bad investment choices. These tricks are called cognitive biases. One common one is loss aversion. This means we feel the pain of a loss much more strongly than the pleasure of an equal gain. So, the fear of losing $100 feels worse than the joy of gaining $100, making us too cautious. Another bias is confirmation bias, where we only look for information that confirms what we already believe, even if it's wrong. This can make us overconfident and ignore warning signs. The herd instinct makes us follow what everyone else is doing, even if it doesn't make sense for our own investments. For instance, following the trend blindly without doing your own research. All these biases amplify our fear and lead to poor decisions. So, how can you fight these fears? First, diversification is key. Don't put all your eggs in one basket. Spread your investments across different assets to reduce risk. Second, think long-term. Investing is a marathon, not a sprint. Don't panic over short-term market fluctuations. Focus on your long-term goals. Also, consider talking to a financial advisor. A professional can help you create a solid investment strategy and manage your emotions. This video explored some common ways fear impacts your investment returns. But there are still many other aspects of investment psychology to consider. For instance, how does overconfidence affect trading behavior? How do different cultural backgrounds influence risk aversion? Further research could explore these questions in more detail. Also, we didn't explore further into specific strategies tailored for unique individuals like Aisha Patel, David O'Connell, Maria Rodriguez, Kenji Tanaka, Nikichi Okoro, and Omar Hassan. That would require deep understanding of individual context. So be sure to like, share, and subscribe to keep watching amazing videos and expand your financial knowledge.